D Street gains pace in the second half of trade with the Nifty stumbling, reclaiming the 25,700 mark and broader indices extending gains. IT stocks remain under pressure with real estate following suit. Metals and PSU banks see healthy gains. Shares of Aurobindo Pharma decline after the US FDA issues a Form 483 with 9 observations at its Telangana plant. Lapses include poor equipment cleaning, data integrity gaps, weak quality control, and deficient complaint handling. Shares of E2E Networks and Netweb Technology surge after partnering with NVIDIA under India's AI mission. The collaboration focuses on sovereign AI infrastructure, GPUs, and indigenous models. Netweb's Make in India AI supercomputers boost its positioning, while E2E gains multi-bagger traction in cloud and GPU services. Tobacco stocks rally on ET Now's exclusive that ITC may hike cigarette prices by 20 to 40%. New shipments are expected soon, with retailers already selling old stock at higher rates. UBS says hikes should offset the new tax regime and limit impact on volumes and margins.
Hello and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita, with me is Sneha Shah, and let's quickly take a look at what markets are up to. We've had a very tight band in which the Nifty is traded in at today. We're absolutely flat in trade, and this has been the case all the way since the morning. Let's pull up the Nifty 50 index intraday chart, and that's the indication, and that really kind of sums it up. For a predominant part of the day, we've been very range bound, in fact. Now, in terms of just the breadth on the Nifty, it's largely even, Stephen, 27 gainers to 23 losers. And in terms of the top losers of the day, ONGC, Wipro, Eternal, Tech Mahindra, Infi are just some of them. In terms of the tilt, of course, very evident in terms of IT stocks continuing to be under pressure today. Another day where that reversal has played out versus yesterday. Tata Steel, HDFC Life, ITC, Tata Consumer and Axis Bank are the only 5 counters trading 1% plus higher and are the top 5 gainers in trade today. Tata Steel just trading in a zone of its own, notching highs almost every other day and continues to do very well for itself and its holders. The Nifty IT index down 1.7%. Really, that's the highlight of the day. That's where a predominant part of the pressure is coming from. 0.25% higher on the Nifty banking index. So that one doing fairly okay. Again, I wonder if PSU banks are really leading the rally over there. Let's pull up the Nifty bank. In fact, let's try and see the Nifty bank and the Nifty PSU bank, see what it's up to. But broadly, I'd reckon that the PSU banks continue to do fairly well for themselves. There you go. The Nifty PSU banking index up 1.1% in trade. So that particular trade seems to continue. The broader markets seem to be doing okay for themselves today. A 34% higher on the Nifty mid-cap index, 0.4% higher on the Nifty small-cap index. Again, the band is very narrow in which we are trading in, but we're doing fairly okay for ourselves, at least where broader markets are concerned. Ravinder here with that list of stocks which he brings to us every day at 2 p.m. Ravinder, what's on your list today?
Well, yes, so some of the data center themes and AI stock this is buzzing in today's session. Firstly, let's start with E2 Networks, where company has collaborated with the NVIDIA for its AI mission, and NVIDIA is building a full-stack independent AI ecosystem in India from compute to models to application. And E2 Networks seen as a multi-bagger play given its post strong performance in the cloud and GPU infrastructure. Orion Pro solution is also in focus, where company has received a major data center project from the leading global developer. So back of this stocks is also in focus. L&T, another stock buzzing, where company has collaborated with the NVIDIA to build India's largest gigawatt scale AI factory, and this venture will scale NVIDIA's GPU cluster deployments at its Chennai DC up to 30 megawatt capacity in its 300 acres gigawatt scalable campus, and at the new 40 megawatt data center in Mumbai currently under execution. From the IT space, Hexaware Technologies is under pressure, where Hexaware and Replit announced joint offering to drive the successful rapid prototyping to producing for enterprise application, and market experts believe that this could near-term the margin pressure for the company despite a long-term AI theme for the AI theme. So back of this, Hexaware Technologies is under pressure. NetWeb Technologies is also in focus where NetWeb Technologies has launches Make in India AI supercomputing system which is powered by NVIDIA independent AI development. So back of this, this stock is also in focus. Some of the stock is in focus on the back of the order win. Dilip Buildcoin, where company has declared a L1 bidder for a 702 crore project on Narmada River in Gujarat, and this project to be executed on a EPC basis within 24 months. Powermac is also in focus on the back of their order win, where company has secured a large-scale order aggregating to rupees 1,000 crore from the subsidiary of Adani Power. Cohance Life Science is also in focus on the back of their block deal, where 1.83% equity changes in the hand in block deal. So back of this stock is also in focus. Dabur India is under pressure on the back of their management regime, where company has appointed Harjit S. Bhalla as a CEO with effect from 15 April 2026, and company has also redesignated Mohit Malhotra as a whole-time director and global CEO. And lastly, a cigarette stock like Godfrey Philip, VST Industry and ITC is in focus, where a BNK report yesterday indicated that the overall profitability hit might be mitigated by a price hike undertaken, and as per sources, ITC likely to increase cigarette prices by 20 to 40% across brands, and new cigarette shipments likely to hit the market soon. So back of this, all cigarette stocks like Godfrey Philip, ITC and VST Industry is in focus.
Okay, Ravinder, that's a bunch of stocks to watch out for, but that is what the breadth of the market is looking like right now. While the benchmark is absolutely flat, we are seeing some action coming in on the broader end of the market. In fact, the mid-cap index is up about 0.3%. So that's where some of the exuberance in the market is coming from today. And the Nifty small cap is outperforming even the mid-cap. It's up about 0.5%, the Nifty small cap space. And that is where a whole bunch of stocks are moving in either direction. Shifting focus to some sectoral moves then, the losers yesterday are the gainers today, and some of the top gainers have turned the tides for themselves. Case in point being Nifty Metal, which was one of the top losing sectors yesterday, is the top gainer today, a 1.25% uptick coming in on Nifty Metals, and that is led by names like Hindustan Copper, that's up 4.5%, Tata Steel, Jindal Steel, SAIL, all of them are looking good. This is followed by Nifty PSU Banks, that was the top gainer yesterday, so continues to hold on to gains for a second straight day. FMCG is looking good at number 3, about a 1% uptick on the Nifty FMCG index today too. Defense, finance, Nifty bank, energy, auto and pharma are in the green. On the flip side, there is a tad bit of a pressure on realty and media, but deeper cuts on Nifty IT. That index is taking it on the chin today, about a 1.5% cut, slightly more elevated than that. It's names like LTI Mindtree, Wipro, Persistent, Emphasis, Tech Mahindra, so largely the broader end of the market, barring Wipro, that is seeing a lot of cuts. And then you, of course, have the large caps that are also participating in this kind of cut that we've seen. So that is what the sectoral trends are looking like in the market right now. I'm really interested in seeing these FMCG names that are all perking up really well in trade. Marico is up 2.6%. ITC, of course, the cigarette maker, on the back of the 18 hour exclusive news that ITC is planning to take hikes between 20 and 40% to try and mitigate some of that additional GST and additional excise duty impact on its bottom line. We have a whole bunch of brokerages who are expecting that if this price hike is taken, and for Godfrey, they believe that this price hike is already undertaken, that could mitigate most of the negative impact that we were expecting to see on the bottom line this time around. On the back of that, Godfrey Phillips as a stock is up about 14.5 to 15%, looking very, very good when it comes to that space. The other stock in focus today is E2E Networks and NetWeb Tech. Pardon me. These names are soaring away on the back of their collaborations with the global tech giant NVIDIA. My colleague Ishika is here with more details on this partnership and what's keeping both of these stocks so excited today. Ishika.
Big moves in the market today. Two major IT names, namely E2E Networks and NetWeb Technologies, have sharply risen after their collaboration announcements with NVIDIA. And the bigger story here is their positioning. Now, starting with E2E, the stock is up sharply after NVIDIA named it as one of the key partners in building India's sovereign AI mission and ecosystem. Now, this isn't just a supply deal for E2E, it places it at the center of India's AI compute build-out. Now, and the market is reacting because this could structurally accelerate revenues and reinforce its positioning as a domestic GPU cloud leader. Next up, we have NetWeb. It has also risen sharply as NVIDIA has launched Make in India, powered by NVIDIA's AI supercomputers. This includes the rack scale of GB200 systems, quite important, and which shipments are already underway. Now, the significance here is scale. Now, NetWeb is moving from system integration to high-performance AI supercomputing backed by NVIDIA's latest Grace Blackwell platform. Now, this meaningfully strengthens its credibility in large enterprise and government-backed AI deployments. So the key takeaway here is that both stocks are rallying due to the validation that they've received from NVIDIA's collaboration. This strengthens their order visibility as well as their positioning globally. Now, the street is also pricing in a potential multi-year AI capex cycle because of this.
Okay, thank you so much for that, Ishika. In fact, let's quickly have a chart check as well. Kunal Bothra joining us in the studios at this point. Kunal, very quickly on the Nifty, what is it that you're seeing? I just want to quickly mark out the high and the low on the Nifty before I take it to Kunal. In fact, in terms of, we've been in a very, very tight band, Kunal. We're around the 25,700 level, but the band has been very, very tight today. And what is it that you're seeing in terms of charts? What are the levels to look out for now? And what are your observations from the moves today?
90 points short than what I expected, I would say, for the intraday on the index. Because my expectation was that with such kind of a market breadth opening up, you're bound to see the index at least a 0.5% positive. My expectation was that at least we'll close in at 100 points odd positive for the indices. And the Bank Nifty may be closer to the 200, 250 kind of points. But I think what today's market day indicates that it's more towards the breadth of the markets which are opening up. And now you try and compare so many stocks. I think you were discussing NetWeb and so many of the other names which are showing signs of double-digit price performance. In fact, you look at the matrix of one of the parameters which we track, the number of stocks which have been falling below the 20-day moving average and the 50-day moving averages. That number for the small cap and the mid cap index just about 2-3 weeks back was at almost 78% to 86% for the indices. That number has dropped down significantly. So we are at a point where almost 25% to 30% of the stocks are only below their 20 and the 50 moving averages. That's a stark comparison. If you try and look at the index movement, the Nifty is more or less at the same zones of 25,500, 750 mark, maybe 1% higher than those levels. But the market breadth has improved significantly. So I believe that the last couple of days, specifically yesterday and today, I think it's more of an indicator that market breadth is starting to open up. And any kind of a zone where the index remains into a stable upside is generally a zone which traders could look at building onto strong mid caps and small caps rather than looking at the index gaining any significant momentum.
Okay, so that's the reading on the index right now. We've been in a band of about 90 to 100 points. We've not moved beyond that range today. So that is the kind of band that we've been trading in. It's been largely a non-event sort of a day for the market. If you only look at the Nifty, of course, all the action lies in the broader end of the market. Kunal, you have been pointing out the kind of moves that we are seeing in the broader end. What would be your stock recommendations for the day, and do they belong to the broader index?
Yeah, I think few of them. So first one is NLC India. I think we don't talk about the stock that much, but the stock is confirming breakouts. In fact, many of the stocks are now showcasing either a bullish flag formation or an inverted head and shoulder pattern inclined, albeit on the daily charts. So I think NLC India is also one of the few stocks. And as I said, there are plenty of stocks which are showing such kind of a patterns. So I'll pick up this name for a potential target of 276 over the near term. Stop loss could be kept at 260. The second would be a ban HDFC Life. Now this could be a revival trade of sorts for HDFC Life. We were discussing this some time back that many of the insurance stocks are still into an underperforming spree, but I think it's now looking indicative of a indicated turnaround for the stock. The stock crossing levels of 715, 720 mark, which is the previous hurdle point for HDFC Life, and then stochastic indicators, etc., showing signs of a breakout on the hourly as well as on the daily charts. So would suggest a buy with a positional target of 775, stop loss at 700.
Okay, what we'll do is slip into a very short break, continue coverage on the other side. We'll continue to talk stocks. Stay with us.
back with closing trades, and let's now take you to the latest updates from the India AI Summit, a stock that we've been talking about so far on the show, Netweb Tech. It's up about 8% as we speak on the back of its collaboration with NVIDIA. My colleague Sumita Karir caught up with the management of Netweb Tech, the CMD, Mr. Sanjay Lodha, to understand what exactly is this collaboration and what it means for the company going ahead. Let's take you across to that conversation.
Basically, supercomputing is not new to NetWeb. NetWeb has been primarily focused into supercomputing for 20 plus years and has been into designing and manufacturing supercomputers. Not only the hardware but the software stack is also completely made by NetWeb. So we have almost all zero dependency on third party. So the NetWeb started at that time when India was denied supercomputing by US. So at that point of time we launched our first supercomputer called Kabru that was ranked as 269th fastest supercomputer in the world. In that journey, actually now you see the supercomputing. This supercomputing is just supercomputing in your hand. So basically this is a very powerful machine powered by Blackwell B10 kind of GPUs. So basically this brings the supercomputing or the AI compute inferencing really on your hands actually, which can really help and enable so as to do more and more AI kind of workloads securely, and inferencing and all that can be done at your tabletop.
So which sectors do you expect a majority of the demand to come from?
There is a very wide demand which we are thinking, because this is the first product which we are launched. Primarily this is for edge inferencing, really speaking. It can be called a supercomputer, but it's primarily edge inferencing device, a very powerful edge inferencing device. So basically this has got immense uses. Like I can give you an example. This can be part of the railways. That basically it can go into almost every compartment or bogie of the railways, where it can collect data and process so you can understand the kind of uses it can have. It can go into various colleges, engineering colleges, where the data analytics is happening, where video capturing is happening. So definitely it will help so as to create more and more secure environment and more faster data processing, as well as on the edge is possible with this.
In terms of your client base, are you targeting national AI missions, private enterprises or global clients?
Yeah, so all the three actually, really speaking. AI mission we have been very much part of the India AI mission, and we have been building and shipping to various CSPs, and even directly to India AI mission also we plan to serve their requirements. That is definitely there. Other than that, all the large enterprises we are working with large enterprises like Zoho, Infosys and others, which have been our customers for long. So 50% of our business comes from government, 50% of business comes from enterprise.
Okay, so that's of course with regard to NetWeb. That stock too is flying in trade. By the way, there's another clarification which is hitting exchanges. The company has an existing relationship with NVIDIA, as what E2E Networks has disclosed. But for the moment, there's no, the recent news item does not represent any new concluded arrangement. So this 8% kind of surge, that was largely because of plenty of networks picking up the fact that NVIDIA had put out an announcement stating that E2E Networks was a partner for them. Well, that seems to be nothing new per se. It's part of the original existing arrangement itself, and you're likely seeing that cool off from the highs of the day. In fact, it hit upper circuit. That stock has cooled off very, very quickly post that announcement. But let me bring on board Siddharth Vora, Head Quant Investment Strategy and Fund Manager at PL Asset Management. Siddharth, talk to us about where we're sitting at contextually from a risk-reward perspective on the Nifty, and where broader markets are concerned, where the mid-cap and small caps are concerned, at least on the index. Where is it that you find risk-reward more favorable at this point?
I think the way we're looking at the markets and the way the whole setup is, we're actually quite constructive, and honestly, we've been constructive for some time now. The macro stability, the neutral valuation zone, earnings bottoming out. The outlook for earnings is much better than what we saw for the last 6 quarters overall. Clarity on the budget, the trade deal with US. Of course, there are some overhangs there, but directionally, we are in the right direction. And not only the US trade deal, but we've also managed to do agreements with multiple other countries and economies. So we've actually diversified our base, The EU FTA, for that matter, has been a really good long-term structural win for India. Supportive crude environment. I think overall, we are set up for a very good recovery. And if you look at India's relative underperformance versus emerging markets, developed markets, and precious metals, it has been at a multi-decade low. So we are in the bottom 10 percentile of relative underperformance versus emerging markets, developed markets, and precious metals. So I think given the growth, the valuation, the strong domestic liquidity, and the favorable macro policy in India, I don't think India has a reason to underperform so much. Of course, the only concern that has been worrying the markets over the last 12 to 18 months is that we're not a major part of the global AI migration or the AI transition. But I think every time AI rallies cool off, India will be seen as a stable AI neutral market with some now potential tailwinds around AI also emerging. But I think we're still not in the top race for now in terms of AI. But overall, I think India is set up for a good recovery. We personally are better positioned and like large caps and mid caps more. Small caps, we've been under allocated. It's pretty much been on an average 10-15% in our flexi cap fund for the last 12 months or so. So we've been underweight small caps because the earnings delivery has been very mixed. Valuations were stretched. Mid caps and large caps, on the other hand, have done slightly better on earnings and give us a little more valuation and quality comfort as well. So we would still stick to our large and mid cap orientation and value orientation as opposed to a very small cap oriented tilt.
That is where the bias is in the market. Siddharth, hi, good afternoon. You spoke about AI and how India still has massive headroom for growth. Now, given this opportunity, would you be constructive on the IT space now, given that there is so much headroom for growth and that some companies like Infosys, like it announced yesterday, have already started incorporating this into their enterprise models?
So, the real long-term story of how AI will disrupt or enable businesses to become more efficient, get more margins, get more orders, it's extremely uncertain. But to me, it seems AI will eventually eat into a lot of business of traditional IT services. IT product companies on platform companies could still be a little more relevant in the decade that we're looking at. Traditional services, which are just labor intensive, labor arbitrage based business models, I don't think they will stand the test of time, and they will have to innovate, they will have to upskill, they will have to retrain the staff and probably run with leaner teams as well. The only reason to have IT in your portfolio right now is because of the sharp correction and a tactical recovery. That's it. Taking a 10-year view on Indian IT services at this point, very difficult, very hard to say how this will all pan out over the next 3-5 years.
How best are you playing the AI theme, Siddharth? Because one is there are tie-ups which are happening with Indian companies. Indian IT, of course, you spoke about that, the uncertainty over there. Or through maybe the data centers, which do you believe is maybe a slightly sticky business also and could well be something which may not be as well appreciated at this juncture as ought to be, in your opinion?
So, we currently, our fund operates in pretty much the top 500 by market cap universe. Within that, we're not getting some micro cap sort of opportunities, and we don't have any direct AI plays. But the way our portfolio has, stood the test of time in the last 1 year, Indian markets have underperformed over 6 months and 12 months, but our portfolio has done really well. We've done 6-8% alpha in 6 months, 9 months, 12 months, 3 months, all periods. So I think the biggest beneficiaries for us have been our allocation to metals and materials, which have seen natural tailwinds from a slightly weaker dollar, a stronger pricing environment, and global supply bottlenecks. So at the end of the day, as AI also plays out, energy, power, metals, all of them are going to be part of that ecosystem. So we are actually playing a third order beneficiary of the AI transition in the world, not any direct sort of data center plays or software hardware plays. We're still too early, and quant models haven't been able to pick these AI plays in India so well till now. And the journey has been quite nascent as well for AI stories in India. So I think metals, energy, and power stocks have done really well for us. And I think we will continue to be allocated to some of these themes rather than try to find any hype names in AI.
Okay, so that's how you are trying to capture this AI opportunity. Start moving away from this entire tech and AI conversation. You've briefly spoken to us about metals and power. What other sectors are you looking at right now? What's looking constructive?
So our portfolio currently allocated, PSU banks has been a big allocation. That's been a theme where we've seen tremendous valuation delta, growth delta, and ROE delta. So it's rare to find sectors where from a bad cycle, growth becomes very good on a lower base or relatively faster than private banks. Valuation, of course, historically, PSU banks have always been cheap and they continue to trade cheap. They never trade at multiples of private banks. But every time the multiple re rates, even from 0.6 to 1, you get a massive return. And the ROE delta in PSU banks has been much higher and likely to be much higher. So I think PSU banks has done well for us. Metals has been a big overweight for us. Auto ancillaries and industrials are now actually starting to perform. And other than that, we've got some allocation in defense and energy as well. So I think overall, if you look at the color of the portfolio, metals, defense, power, energy, industrials, auto ancillary, and some cement and material names as well. It's a cyclical, high beta sort of portfolio. We're trying to not invest in FMCG, IT. I think the FMCG and IT underweight has also been a big source of alpha for us. So the whole cyclical tilt and value tilt to the portfolio has done pretty well for us.
So, and where do you sit at where, consumption is concerned? Therefore, if you're staying away from FMCG altogether, is it only because of valuations? I'm trying to get a sense.
So, see, at any point of time, what our models try to evaluate is on a relative basis, where is growth looking good? On a relative basis, where is quality improving? On a relative basis, where is valuation still a little more comfortable? So I think it's the trinity of value, quality, growth, and it needs to be backed up with momentum as well. So when you get four of these factors playing together, you get sectors and themes. So ideally, we're not active stock pickers where we analyze one stock. Our models do all the heavy lifting and they create the portfolio. The quant model creates the portfolio by analyzing multiple sectors, themes, and securities on 5 to 10 different quantitative factors. And that is how the portfolio is constructed. So FMCG, for example, high quality, but the delta in quality, not so good. Moderate growth and high valuation. And low momentum. So it doesn't fit the quant bill.
Okay, so that gives us a broad sense of how you are placed in the market right now, what's looking good, and how you are playing this AI theme. Very interesting conversation indeed. So that thanks so much for your time today.
Thank you so much.
Thank you. Okay, viewers, on that note, time to slip into a very short break, just taking a look at if there has been a recovery in the market. There has. We're about 0.2% higher. Nominal recovery, but just take a look at the chart that we're seeing of the Nifty 50. A fresh high for the day, 25,786. In fact, we're inching closer to the 25,800 mark. So the last hour of trade has got traders rather excited, is what it seems from the Nifty right now. Sensex 2 up 0.2%. It's Nifty Bank that has seen a very sharp uptick from when we addressed it about 15 or 20 minutes ago. Let's have the Nifty Bank chart on the screen. A 0.5% uptick coming in and a very sharp spike towards the day's high for the Nifty Bank as well. On that note, viewers, time to slip into a very short break. Be right back with more on the other side. Back with closing trades, and we've been speaking about a bunch of sectors ever since the get-go. Of course, the conversation today has been centered around tech and AI, so a lot of IT stocks have been in focus. On the flip side, it's Nifty Metal that has once again started to pick up some steam, and we've spoken about that as well. The one sector that we haven't spoken about in a couple of days, Kunal, is the real estate pack. Of course, Anantraj leading from the front only on the data center bit of it, but you have Godrej Properties, Lodha, that's to some extent holding on to the green, but then you have some bigger cuts in Oberoi, Prestige, Phoenix. Talk to us about if anything is looking good from the real estate pack right now. Would you be recommending a fresh entry in any of these names, or is it more of a wait and watch situation when it comes to real estate?
No, I think it's a good sector to look at investments. So maybe some sort of selective investments. DLF, Oberoi Realty, Godrej Properties. I think these are few names which have done reasonably well. Sobha and I think many of the other names have also come back to their respective 200 moving averages, or just about trading closer to their long-term moving averages, off by a few percentage points for these stocks individually. But what I like specifically about the real estate sector, the realty sector specifically, is the rally which you've seen from those recent lows. I think end of January, start of February, we were almost at 750 on the Nifty Realty Index, and from there we've slowly, gradually, even in this phase of a huge volatile market in between, we've eked out 10% gains on the Nifty Realty Index. That I believe is a very strong indicator that the market sentiment is getting a little bit more stronger towards the realty stocks and the sector. And that's why I think you're seeing many of these stocks making new or higher lows for themselves, whether it's the likes of DLF, Godrej Properties, etc. So that I believe could be a good sector to look at. And these minor corrections which come by, like in the last 4-5 days, we've seen the Nifty Realty Index also correcting by 3%, 4% broadly. These minor corrections of 3-4% in a trending upside is generally considered to be a good opportunity to average further. So bullish on the sector. I think sometime back I had given a buy call on DLF as well as Godrej Properties. I still maintain those bullish stances on both of these names. And then if someone is looking to add maybe slight high beta within the pack, Anantraj could be the other stock in that category.
Talking about Anantraj and that play on data center and everything that's playing out in AI, Kunal, I wonder if you have a view with regard to something like an E2E Networks, a NetWeb. All of these are really buzzing on the back of everything that's playing out with regard to AI. What's the view there?
So E2E I don't track, so I'll skip that. But NetWeb is something which I do track. In fact, the stock in the last 6 months or so had gone through a decent correction. The recent high for the stock was around 4,300, 400 levels, and then it had come back towards almost a 30% correction to 3,000 mark. But remember, I think prior to that, start of 2025, the stock had recovered or delivered more than 100% returns. So it started off 2025 somewhere around the 2000 levels, and then from there the stock climbed up to almost 100% returns, came back towards a 30% correction, and now is on the way back again to a recovery phase. So this I believe could be a strong indicator that you're looking at a reset of the trend for many of these stocks. What was earlier happening was a very strong uptrend for these names, and then a multi-month consolidation, price correction, where there was lack of volumes, no buying interest happening. The buying interest could probably be triggered back again to these names. So that I believe could be a positive. And NetWeb on the short to medium term charts also I think has been trading quite strong. Multiple supports at the 3,000 levels for the stock in the recent past. So maybe that could be kept as a closing based stop loss for someone who's looking to buy or enter at current levels.
Okay, so that's the chart check on NetWeb Techs. Of course, this entire data center theme has been in focus. Anantraj also doing pretty well on the back of that. Some of the real estate stocks like Lodha and Prestige have also tied up with state governments like Government of Maharashtra in the recent past to foray into this segment. So yes, this is a segment that is seeing a lot of hype around it right now. Lots of news flow also centered around this up and coming segment. But with that, viewers, time to slip into yet another very short break and many interesting conversations lined up on the other side, so you stay tuned. Back with closing trades, and India's economic outlook remains resilient despite global uncertainty, with policymakers flagging a prolonged transition phase worldwide. That's the word coming in from Neelkant Mishra of Axis Bank on the sidelines of Mumbai Climate Week. He also adds that strong domestic demand, rising investment and fiscal discipline are supporting medium-term growth. Listen into a slice of that chat.
The world is going through many seismic shifts. The post World War II global order needs to be reshaped. Uh, there are grand objectives. Every country wants to take advantage of it. There is no grand strategy, so there is no coordinated approach yet. We should expect that the approach will be quite chaotic globally in the next decade or so, maybe longer. So as much as it exposes us to new threats, it I think also opens up new opportunities. The world is looking for trusted partners. The world is looking for large pools of demand which are stable. I think the government has taken the right approach of focusing on stability, on making sure that there is fiscal discipline, the balance of payments is stable, the financial markets are well capitalized. So India in this period of global instability and I would say even mercantilist thought is coming across as a beacon of openness. We have signed many free trade agreements. 70% of our exports are now under FTA. We are relaxing QCOs. We are opening up our markets. And we have a very large domestic demand and a lot of
on the growth front, we are much better than the other emerging countries. But sir, do you think that it's a sustainable for next 3 to 5 years? And what else need to be done to sustain this growth?
Yes, I am very sure that because that growth will sustain. Because you remember that in the last 3-4 years, the need to bring down debt to GDP, the need to bring down cost of capital meant that the government was doing fiscal consolidation. Now as the government consolidates fiscally, it ends up being a drag on macroeconomic aggregate demand. Now that the fiscal deficit doesn't need to fall materially from where we are, the economy can come back to its natural trend growth, which will be faster than what we saw last year. So I'm quite confident that our real estate cycle is turning. I think a power generation cycle is turning.
Private capex is also picking up, or mainly capex is led by the government capex only?
Government capex is about 3.1, 3.2% of GDP. Investment to GDP ratio in India is about 33%. So quite a bit of the capex cycle is actually housing. So commercial real estate, residential real estate is a very important part of the real estate cycle, of the investment cycle. And what we are seeing is very strong revival in corporate capex. In 2021, the investment to GDP ratio in the economy was 27%. Last quarter, it was close to 33%. So there was a 6% of GDP improvement. About, I would say, 1.5% of that came from the central government, but the rest of it was all private.
Q3 earnings for Nifty 100 stayed resilient with revenue up 9% year-on-year and EBITDA rising 14%. Consumer services, defense and durables led revenue growth while oil and gas topped EBITDA gains. Profits surged in auto and defense but weakened sharply in FMCG, realty and power. Labour code impact stood at 15,000 crores, denting PAT by nearly 5%.
Hexaware partners with Replit to accelerate AI-led enterprise app development. Ola Electric gains after the Bombay High Court stays a warrant against CEO Bhavish Agarwal. And Dilip Biltcon emerges lowest bidder for a 702 crore Narmada project.
Amid chaos and controversies, Meaty Seki S. Krishan says the government is extending the summit by a day to avoid inconvenience to visitors. He told Times Network that the decision was taken in public interest but will remain closed to the general public tomorrow.
Welcome back, and let's get in, Sumita, for all the latest updates coming in from the AI Summit. One of the main showcases is Airtel's AI-based spam and fraud detection system, which the company describes as an AI-powered filter operating at the network level. According to the company, the system analyzes traffic patterns and behavioral signs in real time to identify suspected spam calls, scam messages, and malicious links. Sumita to walk us through this piece.
How is AI helping telecom companies fighting spam calls? Because that is one big consumer issue that hasn't really been resolved. In fact, it has been brought up again and again with telecom companies, with the telecom ministry as well. So Airtel has come up with a tool. It's an AI-powered tool that helps banks sort of identify consumers who have sort of been noticed doing suspicious activity. In fact, if I could ask my camera person to come close to the screen and take a look at this feature. Now, first things first, this feature is essentially meant for banks. What a bank essentially does is it can sort of put in any number that's of a customer that's all right, that's associated with it. So example, I put in a number, and the score that the number has gotten is 0.19, which is a low risk score, account where behavior is verified and there is no risk detected, especially when it comes to spam calls. In fact, let's take another example and put this number over here. I've put in this number and we will get a score as far as the activity related to this number is concerned. So it is a high risk activity associated with this account. This is a high risk identified, and this account has been flagged for review. So very, very interesting tool that has come up with. And what are the parameters on which a bank essentially decides whether a consumer's number is associated with spam related activity or not? So this is related to any suspicious location, whether there's been any SIM swaps, whether there have been bulk messaging. There's been bulk messaging that's gone on from a certain number, and whether devices have been changed multiple times. So any kind of unusual activity, well, that is detected by AI, and then that gets flagged to the bank officials.
Okay, Sumita, thanks for taking us through that. So that's very interesting coming in from Airtel, this ability to try and track spam calls and flag them off before they actually reach through. That's calls and messages both on the spam side. So interesting development coming over there. Let's shift focus once again to the markets and get in touch with Mr. Vineet Bolinchkar for a conversation from Ventura Securities. Along with him, we also have Mr. Shrikant Chauhan from Kotak Securities to try and understand the market breadth better. And of course, Kunal is still with us in the studio. Vineet, coming to you first. Hi, good afternoon. It's good to be chatting with you after quite some time. Talk to us about how you are reading the market move overall, the kind of decent days that we've seen leading up to today's trading session, the past 2 days, and today the kind of subduedness that we are trading with. In a near to medium term, now that earnings are behind us, all the positive triggers that were expected to happen in terms of the trade deal, all of that has already shaped up well. What is the outlook on where the market could be heading, and are you expecting any major moves?
So I think, our market is well positioned to hit 27,000 from current levels. We have been in that tight band of worry because of constant pressure on the international markets. But I think we have climbed every wall of worry, and all things after the tariffs, the various FTAs that we have signed, and the encouraging results that we have seen in the quarters point to a very, very strong growth trajectory going ahead. And as I mentioned to you, we think that 27,000 is very much on the cards, and we should be hitting new highs.
Okay, very interesting. Shrikant Chauhan, what are you seeing, Shrikant, on charts? Do you expect, any moves upwards or downwards on the index from a chart perspective?
Yeah, good afternoon.
Good afternoon.
I think still the market has crossed important level of 25,800, despite there was, we can say, weak response from IT stocks. Crossing this important level of 25,800 clearly indicates that our markets are now heading towards the levels of 26,000. So we may see some more activity in BFSI and maybe other large cap stocks like Reliance Industries and ITC. So broadly, we are of the view that market is going to consolidate. We are not going to see any runaway rally in the market. We need to be more and more stock specific. But yes, with a very short term view, the market has crossed important level and the chances of hitting 26,000 are very, very high.
Okay, interesting. Shrikant, hold that thought. IDFC First is stepping up its climate finance push with green deposits crossing the 1,000 crore rupee mark as customers actively opt for the sustainable savings mode. MD and CEO V. Vaidyanathan says climate financing needs innovation beyond traditional loans. Listen to a slice of what he has to say.
First of all, I think there is a lot of public awareness, and we find especially the youth more conscious about social causes and green deposits. So we have just seen, somehow we went to our app and went to our website and we just promoted this concept of green deposits, and we have 4 choices. Customers are choosing green deposits. So it's we are actually quite happy to note there is a movement for green deposits.
Now, from here, there is also, at least regulator and government wants that green financing should be pushed. From your focus area, how much important is that, and how does IDFC First?
It's very important. See, what IDFC is doing is that, we do two-wheeler financing in a big way. So we have done 400,000, that is 4 lakh electric vehicle financing. So normally, and it's profitable also, because the default of electric vehicle two-wheeler financing even lesser than the internal combustion engine. So we are actually impressed with it, actually.
You have been giving guidance on the fence, where do you want to reach in next 3 to 5 years, and consistently, even in the presentations, you have maintained that, this is what we have achieved and this is what we
give
want
a direction, yeah.
So in that, from that point of view, I want to understand, especially on green financing and green deposits, is there any focus area, is there any number which is there in your mind?
I know you're getting there, but the thing is that we have not put out any specific numbers for green financing as such. But you see our, we are actually the 3 areas. One is the corporate sector,
right,
which is renewals. Second is the retail sector, which is products like the one we talked about, and deposits. So on all of these things, we are finding green as a concept is growing by about 20 to 25% a year. So you can project it to the future.
Right, and you are now a retail-led kind of a bank, whereby we are also seeing that comparing with other banks, there is a growth in corporate book as well. How do you see in coming quarters IDFC First turning its focus area? It will remain the same, or you think more of a corporate book growing is also
in today's discussion, we should focus on green, which is the subject of the discussion. So, but the short point is, I'll still answer you, that we believe that corporate bank is also an important segment for the bank. It gives you trade, it gives you FX, it gives you salary accounts. We like it.
One last question before I let you go regarding the regulatory point of view. Do you think there is some support which is needed from government or regulator?
Already quite a lot. If you see the focus from the regulator on green, you'll be surprised. There is so focus is there, interest is there. You could see from the government there is point of view, there is this support for the blended finance.
Right.
So it's coming. According to me, it's coming quite well.
Okay, well, that's that word coming in from the top boss at IDFC First Bank, with shifting focus back to the markets. And while we have been talking about other things, the market has once again reached a fresh new high for itself. On an intraday basis, I mean, 25,821. Yeah, Harsh, don't get excited. I mean, on an intraday basis, 25,820, the new intraday high for the Nifty. But, while we are talking about a high for the Nifty, Kunal, any visibility on 26,000 and beyond, given that we were so range bound for majority of the day, and then this sudden sharp spike in the last 1 hour?
It said that whatever you manifest, you get achieve.
We're
so maybe I think what she said with the new high, I think it should be in the offing very soon, which means.
And you manifested the 90 points. You got 100.
Yeah. So we manifested 90 points, 100 points total on the Nifty. I think we are bang on at that 100 point on the index.
But point being, upsides from here, Kunal, and how quickly?
So I think there is now a scope for the index. So what happens is that with every movement on the upside, there's been some obstacle for the index, whether it's global market sell-off, which happened last week, whether it's AI-related sell-off for the IT pack. We've been obstructed, quite a lot. So I'm assuming that if there is no major obstruction going forward, say for the remainder part of this week or the next week, then I think we should be on course of breaking that 26,000 mark. I would believe that potentially by Thursday or Friday, I think that's tomorrow, day after, I would look at 25,900, 950 as the next target for the Nifty in the near term.
Very interesting. Okay, Vineet, I wonder what's your call on metals at this point? Tata Steel at 52-week highs, the Nifty Metal Index at 12,000. What next?
I think, the trend towards purchasing of hard metal currencies is going to continue. and they're only going to get stronger. And we continue to remain buyers, and albeit for a little bit of sideways correction that we have seen, we think that these are very, very good levels to enter metal stocks. We like Hindustan Zinc the most, and Tata Steel, I think, is a extremely undervalued stock, and we should be seeing all the, steel companies also join the bandwagon as they move towards higher levels.
Okay, Vineet, talk to us a little bit about both Tata Steel as well as Hindustan Zinc. Give us the thesis there. You're saying Tata Steel is undervalued. What's the likely unwind going to be like going forward, at least on the earnings front? Because my sense is that stock price will follow earnings thereafter.
Yeah, so if you see Hindustan Zinc, I think, the average pricing that is there, as we've seen silver prices move higher, is going to continue to add to the EPS and profitability. And in the case of, you know, Tata Steel, we are seeing very, very strong traction in terms of demand. We are seeing very good, regulatory action, which is protecting the Indian markets. And I think all these factors add very well to the story. And we believe that Tata Steel should move very aggressively from here.
Okay, so that's how Hindustan Zinc and the other stock, they're shaping up, Tata Steel, that is, how they're shaping up in terms of valuations. Shrikant, a chart check on names like Hindustan Zinc particularly, given the kind of silver rally that we had seen and the uptick on the stock, more than 700 is where the stock was at, and then it's seen a very sharp correction, now around that 585 mark. Do you believe, at least on the charts, there is more correction in store for something like a Hindustan Zinc? Add to that mix a Hindustan Copper as well, and what's the outlook on both of these names?
So for precious metals, I am of the view that the market, I'm to say these commodities are going to take time. They are going to consolidate furthermore. And at higher levels, certainly we are going to see profit taking or maybe selling pressure in the market. So at this level, it is better to stay away from taking any specific buying view on Hindustan Zinc. I am of the view that it is going to consolidate and maybe it remain lackluster for next couple of weeks or months. So at present, there is no view, but yes, the stocks which are into, let's say, diversified business like Hindustan Copper or GMDC especially, there Vedanta GMDC, I think there we can expect further more activity in the near term, and there we should look for adding some long positions. We are specifically bullish on steel stocks. There we are expecting further more activity, and in that our preferred picks are JSW Steel and Jindal Steel and Power. So from the metal space, the focus should be more on steel stocks as well as on little bit diversified companies like GMDC and Vedanta.
Interesting. And let me come back to you, Vineet. Platform companies, especially the likes of a Paytm, there was a Macquarie note which came through a couple of days back, due to which Paytm has done very well over the last few days. You have been a bull on Paytm since maybe sub 700 levels, if I recall right. Where next for this stock in terms of price, and what's the value unlock journey going to look like in terms of profitability, in your opinion?
Double-digit growth is very much for the asking, and that, coupled with its very, very disciplined cost measures, is going to add to the margins. And all these things are very positive, and our some of the parts valuations indicates that we are heading somewhere in the region of 1800 to 2000 over the next 1 year.
Okay, so that's on Paytm. Kunal, want a chart check from you on some of these cigarette names that are doing very well. That entire overhang of this GST slab being increased to 40%, the sin good slab and this excise duty, the addition of that from the government seems to be largely behind these stocks, at least the way they're performing on in terms of the stock price. But also some brokerages have been flagging off that price hikes are underway for some of these names, and they could potentially mitigate the entire bottom line impact of these negative developments. On the chart, charts, how would you read an ITC compared to a Godfrey Phillips? Given that Godfrey has just hit upper circuit of 20%, what's your take on the charts?
Yeah, I think though both these stocks are now looking like that there's a major bottom in place for both of these names, including ITC. The stock which was beaten down, I think 25%. Even Godfrey Phillips, I think the stock had corrected from 2,800, 2,850 or 3,000-ish kind of levels to almost 2,000 mark. So there was a 25% correction on both of these names. And Godfrey Phillips, I think, has recovered almost 50% of that 1,000-point odd correction for itself, now coming to that 2,500 levels. ITC, on the other hand, the stock is still, I think, some 18 points away from breaking that 50% barrier. So I believe that both of these stocks start to look attractive. What matters over here now is the beta nature for these stocks, because ITC historically has been a low beta stock, but because of the recent sell-off the stock has seen, you might see some bit of increase in the beta on the stock price. I wouldn't be surprised that the stock comes close to that 350 kind of a mark, potentially in the next couple of weeks. And I think for Godfrey Phillips, we could be looking at the stock slowly and gradually moving towards that 2750 to even 2950 mark, from where the sell-off started off. So I think now we are in a process where many of these huge underperforming stocks, a high sell-off stocks, what they've seen in the last 1 or 2 months, they could be at a point where you might expect a V-shaped recovery into many of these names.
Interesting. 20% up is what Godfrey Phillips is doing, 2.5% higher in an ITC. I wonder what a VST is also doing, if we can throw that one as well in and try and quickly have a look as to what a VST Industries is doing. There you go, 3% higher on a VST Industries as well. Vineet, I wonder how you look at some of these cigarette counters. You believe that it's mitigatable, is the additional indirect tax that is being levied on cigarettes, is pricing not as much of a concern, and if price hikes are undertaken, will demand compress?
We've seen that play out over years. Every time that the GST rates have been increased, taxation has gone up. There is a initial lull in terms of volume pickup, but eventually the demand does come back in spite of higher prices. So they are very oblivious to price hikes, and price hikes are inevitable, and that is what consumers also understand. And we've seen them take these things in their stride and move on. And I think that VST Industries is very well positioned to benefit among the three players.
Okay, so that's the fundamental view on some of the cigarette companies. One company that's, in fact, there are two companies now that are going to be coming out with their earnings tomorrow. One is ABB and the other is CIA Automotive. Shrikant, any chart check on ABB if you stack it up with other cap good players like a Siemens, for example? Which one looks better on the charts, and any specific view on ABB on the charts?
Yeah, I think this space is also buzzing very well since last almost 1 month. And there is like a lot of buying interest in stocks like ABB, Thermax, Cummins, including Siemens. So there we can expect further more activity, and most of these stocks have spent a lot of time, close to, I can say, 6-7 months. They were like finding difficulties to cross important resistance level. But now, after this particular time-based consolidation, most of the stocks have managed to surpass immediate resistance level. Like Cummins has crossed the level of 4,000, and thereafter we are seeing consistent rally in the stock. So similar sort of activity is not ruled out in stock like ABB, which is currently around 58.80, 58.70. Based on technicals, we are bullish on it, and we are expecting this stock to move towards the levels of 6,500. It will take time. It's a positional call. It will take months to reach over those levels. But at current levels also, it looks very strong candidate to buy for. We also like Thermax, which is around 3,095, and it is still available at 52-week lows. There, the stock has formed double bottom sort of formation. And if the overall space is going to do well, we can expect at least 10 to 15% sort of activity from this particular stock also.
All right, ABB, in fact, numbers expected tomorrow. How is the company poised, and what are the kind of numbers to expect? Karan here to tell us what the street is expecting.
Well, ABB India is all set to release its quarterly earnings for the fourth quarter of calendar year 2025. As far as the revenue is concerned, revenue could see an uptick of 4% on the back of large order inflows and export momentum. The street will also watch out for incremental inflows from data centers, renewables, railways, and private capex. Remember, in the last week of Jan, the parent company had mentioned that the order inflows from ABB India have increased by 49%. So do watch out for that. On the flip side, as far as the EBITDA is concerned, the EBITDA could see a decline of 17%, with EBITDA margins contracting to around 400 basis points. EBITDA margin contraction is expected mainly due to higher commodity prices and competition.
Okay, Karan, thanks so much for taking us through that. So those are the expectations that the street is working with when it comes to ABB's numbers. Let's shift focus and Kunal, talk to us about transformers and rectifiers on the charts. It's touched that 300 mark today. 9.5% uptick coming in on the stock. In the last 6 months, the stock is lower by 40%. That's quite a steep knock that the stock has seen in the recent past. And now, given this uptick, would it make for a confident, good entry point for the stock, or is it a wait and watch call from your end?
No, I think it's a definite, definitely a very interesting chart because, there is a distinct feature about the stock in the last 2-3 months is the huge jump in terms of volumes. You look at the monthly volumes for the stock in the last, I think, 4 months or 3 months. And the average volume for the stock is around 18.5 to 20 crores on the monthly basis. Now, you compare this with the last, I think, maybe 2 years. That's around 22 months for the stock price. The average volume for the stock was around 1.5 to 2 crores. Now, that's a significant jump the stock has seen in terms of volumes. This generally happens when there is a fresh wave of buying which happens into stock prices or fresh investors who've entered into the stock. So I believe that purely on the basis of volumes, even on the short-term charts, like the last 2 months, the stock forming a double bottom of sorts, taking support at 230, 225 levels, that establishes a strong support for the stock. So I think in that context, this looks like a stock which is getting accumulated and looks very attractive. But for this kind of stocks, you'll have to have two important parameters. One is that your risk appetite has to be on the higher side because these stocks could be very high beta in nature. You might see swings of 10%, 15% on a couple of days and then a price correction of 5-7% on subsequent days. So you'll have to be ready with that. And the second is that your time frame cannot be short term. Your time frame has to be at least 6 months, 1 year or more than that.
Okay. Shrikant, then we come to you with regard to Cohance. That's the other one that's buzzing. Cohance and Orion Pro Solutions. Some of these have been very volatile in general. Any call with regard to either of these?
No, I think these stocks have fallen drastically from their highs, and currently, whatever the up move that we are witnessing, it's just a pullback to the sell-off that they witnessed in last several months. So I am of the view that it is better to stay away from taking any such riskier bets. In these markets, there should not be we should not be like contrarian buyer. Instead, we should look for taking some trending or maybe trend following bets in these markets.
Okay, so that's on Cohance. While we're talking about the pharma space, the other stock in focus today is Aurobindo Pharma. US FDA has flagged off some issues at their Telangana unit. They've issued a Form 483 with 9 observations and some very grave observations. In fact, it talks about unclean equipment and utensils, inadequate control over computer systems, master records have lacked complete instructions. Investigations have found all of these gaps in their operations. They've failed to thoroughly investigate batch discrepancies and they fail to call or recall these batches as well. The GMP training is not conducted with sufficient frequency. Quality control unit responsibilities and procedures are not fully followed, and the USFDA also flags that established lab control mechanisms are not followed. Laboratory records do not include a complete record of all data obtained. So lots of issues on the operational front, on the record keeping front. So that's not looking good for Aurobindo Pharma today at all. In fact, the stock is low by 2.5%. Shrikant, the chart check on Aurobindo Pharma, what are the levels showing you right now? How is this chart shaping up?
Yeah, so for most of the pharma companies, I'm of the view that they are consolidating at a higher base, and eventually maybe it will take time, months or 2 months. But eventually, we are expecting pharma companies to do well. But in the near term, we are expecting further more consolidation because still they are below their important resistance levels. But on long-term charts, eventually we are going to see upward breakout. That's my view. And based on that, we have drawn the strategy. We are buying these top companies like Aurobindo Pharma, Glenmark Pharma, as well as Sun Pharma to our positional portfolio. Especially for Aurobindo Pharma, currently it is around 1160. It is finding difficulties to sustain at higher levels, but whenever there is a correction in the market and stock, the stock is finding support close to 1100. So at current levels also it's a buy with a target of 1200 on immediate basis. But eventually I am expecting stock to move towards the levels of 1400 or 1450.
So that's a chart check on Aurobindo. Vineet, very quickly, we only have a couple of minutes before market close. How are you reading this issue for Aurobindo? And recently, USFD has flagged off a lot of concerns for some other listed companies as well. How much of a concern is this for some of the listed companies? How should we be reading into this?
Yeah, it's a matter of concern, and couple this along with the fact that we are seeing some kind of pressure build up on the dollar. It's going to impact their earnings. So we are kind of a little guarded on pharma stocks, especially the ones which are flagged off by the regulator.
Okay, so that's the take on some of the listed companies within the pharma space and the recent USFD action that we've seen over there too. On that note, Vineet and Shrikant, thanks so much for joining us. We'll let you go. Just taking a look at how we're summing up for the day, and good move coming in. You can actually say all's well that ends well for a day like this. You have the Nifty above 25,800 now, so 0.3% of an uptick is what we're seeing on the Nifty. Sensex also higher by 0.3%. The Nifty Bank has once again outperformed the Nifty. 0.6% uptick coming in on the Nifty Bank today. Good show coming in from some of the private as well as PSU banks today. It's HDFC Life, Tata Steel, ITC, Bajaj Auto, Tata Consumer and M&M along with an Axis Bank that's doing well on the Nifty 50. On the flip side, from the Nifty losers, it's names like ONGC, Wipro, Eternal, Tech Mahindra, Infosys, Adani Enterprises and HCL Tech. From the broader end of the market, you have more moves coming in over there. Nifty mid-cap is up by about 0.5%. The small-cap index is also absolutely in tandem with the mid-cap index. It's also up 0.5%, so good move over there too. Sectorally, lots of moves coming in on the metal front. Very good day of trade coming in for something like a Hindustan Copper. Hindalco has done well. You have Jindal Steel, SAIL, NMDC, Vedanta, Nalco. All of them are doing well and holding the Nifty Metal Index about 1.25% higher. Nifty PSU Bank also 1.25% higher, as is the case with Nifty FMCG. Following that, you have gains from Auto, Bank, Defense, Finance, Realty, Energy, Pharma. And on the flip side, it's Nifty IT, the only sectoral loser today. The index closing in the red, and big cuts coming in on LTI, Mindtree, Oracle, Persistent, Tech Mahindra, Emphasis. So it's largely the mid-cap end of the IT stocks that's taking a little bit of a knock today. Some stocks in focus today, of course, the entire cigarette pack was in focus on the back of anticipated price hikes. Brokerages have also given thumbs up to this move. So it's ITC that's done well. Godfrey Phillips was locked an upper circuit of 20%. There it is. The recently listed Quality Walls that made its debut 2 days ago has also hit an upper circuit of 5% today after 2 days of lackluster trade. So looking good for Quality Walls in today's trade as well. Other than that, if you take a look at the Nifty 500 stocks and where the big movers are in trade today, you have transformers and rectifiers that's up 9%, Netweb, Schneider, of course, Netweb and E2B in focus on the back of those partnerships that they had inked with NVIDIA. E2E also came out with a clarification saying that it's not a new partnership, it's an existing one that they have with NVIDIA in place already. Power Industries, GMDC, Cohance, all of them have done well. Lastly, on the flip side, pressure continues for Brainbees. Hexaware is under pressure along with Vari Energy, Birlasoft, RK Forgings, Force Motors, Apfel as well as ONGC. But that is how we're wrapping up for the day and shutting shop. Nifty is doing really well, or rather has done really well for itself, and closing at the day's high is the Nifty 25,800 thereabouts is where we've shut shop.
The Nifty Bank has done fairly well for itself. That's the one that's standing out. The Nifty PSU Bank is the other one that's standing out, of course, outside the Nifty Metal, which we spoke about for bits and pieces of the show. Kunal, what's your take with regard to the move today? a very good hold up that we've seen. After we inched upwards 100 points, we've held up fairly well for the last half hour or so. Encouraging signs, you reckon?
It is, and in fact, it also adds up towards 3 consecutive days of positive for the indices, which generally is considered to be a positive sign for the index in terms of sentiment, as well as it gives confidence to traders who've built up position the last couple of days to maybe carry forward positions, expecting the index to show signs of further up move. We've broken past about 25,750 mark. This level is very, very important. Why? Because it also marks the filling of a gap and a major gap down which was seen into the index previous week, when we'd seen almost like a 300 point kind of a cut on an intraday basis for the index. So it fills up that gap, which means that the immediate bearish sentiment, I think, has been covered into. So a lot of positives to take away for the markets. I would believe gradually, because when you see mid caps opening up, small caps opening up, and showing good price performance, very good volumes like we enumerated for a few stocks, it indicates that the index will also gain back into momentum pretty quickly. So bullish view on the indices from here on, and expecting the index to maybe close nearer to the 26,000 mark, hopefully by the end of the week.
Okay, so that's the outlook for the market setup for the rest of the week. But on that note, we completely timed out on closing trades as well as today's trading session. So viewers, thanks so much for tuning in, and we'll see you bright and early tomorrow morning.